All right, welcome to something that I'm going to start doing a lot more often, and this is going to be a trade recap of a trade I took last week. I usually like doing these live so you guys can actually see my thought process, but I feel like doing it this way is a lot more informational. You contradict yourself and you find out that you were actually wrong, which is all part of the process, but I feel like if we do a recap with everything that I did right here and everything that I did wrong, organized into like a small 10 to 15-minute video, it can be very informational. And so you just don't have to sit through an hour long of me just watching price action if I end up not taking a trade. So this is going to be a recap on Friday, January 13th. We ended up taking a very good long A plus setup with everything that went on here. I mean, to be honest, if you didn't take this long and you're trading IFEGs, I don't know what you're doing. And we're going to explain exactly how I got to this point. So coming into the day, obviously I had a very bearish bias. Why is this? Because we are completely disrespecting bullish PDAs and respecting higher time frame bearish PDAs, as you can see right here. So when you have a bearish bias, right, and you come into the day and you see something like this, which is a huge hourly or 4-hour bearish imbalance, which is unmitigated, regardless of what price is going to do today, the ideal scenario would be to see price trade up and mitigate this 4-hour or hourly gap, or to just completely displace lower. So those are my two scenarios coming into the day. The first thing that comes to my eye when we're looking at this range is obviously we have this huge 4-hour imbalance below us. So either we're going to completely displace through this 4-hour and continue lower, or we're going to use this 4-hour to bring us up and rebalance this 4-hour to then head lower, right? So we know that price likes to move from external to internal to external to internal, or sometimes internal to internal to external to external to internal. Price is usually doing one of two things, and it is rebalancing inefficiencies or seeking liquidity. So like I said, ideally what I was looking for coming into the day was for this 4-hour to either get mitigated and bring us lower, or to seek these lows that got put in this 4-hour, sweep these intermediate lows, and then for it to bring us higher. And this is supposed to say low, not intermediate high. So yeah, that's as far as my higher time frame analysis goes. Now, when we actually get into the lower time frames and what we're genuinely dealing with for the day, we did have CPI, and it is a well-known fact that whenever we get a strong move with CPI, a lot of the times price usually moves in that same direction for a good amount of time. And this is why so many people like to take continuation trades off of red folder news. Time-based continuation trades like the 830 candle printing a fair value gap. A lot of people will take continuation off of that. In my opinion, I think it's a lot better for us to wait for either the high of CPI or the low of CPI to be taken before we take a trade. So after this 830 CPI candle prints, automatically now we have two draws. We have CPI high, and then we have CPI low. Realistically, what we usually do after we get a nice news candle like this with a really good wick, we usually sweep one side of it and then seek the other side. So how can I combine this with my overall bias? Well, I said to myself, if we come down and take out this intermediate low without touching CPI high, there's a very high chance that our next objective will be CPI high, and then obviously will be this unmitigated 4-hour. So after we printed the CPI high, I kind of just waited to see what market wanted to do, and we go ahead and put in a high right here next to CPI high, which you can call pretty much engineered liquidity. I mean, anytime that we create a high and then we get really close to it, especially if it's something important as a candle, as a data high or a data low, and we just don't touch it by a point. A lot of times you could do this with True Day Open as well. I see this as price engineering liquidity, engineering stops here, making it seem like there is a force of resistance here to then run all the stops and take out CPI high, obviously. So fast forward into 9:30 open. What do we want to see if we want to take longs? Regardless of what our bias is, if we want to take longs, what do we need to see at 9:30 open? Well, if we want to take longs, we need to see a 9:30 open low. The most probable scenario is for a candle to open lower, manipulate into a key level, which we have mapped out here, which was pretty much our only key level that I would like to see longs off of. Any lower than this, and I would just assume we're going to head for the sell side. And then it just wouldn't be worth it to wait for all this just to take a long. So essentially, I knew that if we were going to reverse at any point in time, this was literally the only line I had on my chart at the time. It was either we come down, sweep this low, and give us a really good scenario for longs, or we just completely avoid this low. We trade up into here, take out CPI high coming into 9:30, and then we take shorts. So in this scenario, either we would have had 9:30 open high, take out this high, and trade into this 4-hour gap potentially and see shorts lower, or we see 930 open and trade low. And what do we get? We get 930 not even manipulating into this high at all, and in fact adding to this buy side liquidity pool. And then what do? We trade lower into this huge 4-hour imbalance, and then also this London intermediate low. So automatically when I see something like this, I'm on the 1 minute time frame, and actually I had the 30-second open on my second monitor because I have to use Trade and I'm automatically eager to get an entry. Why am I so eager to get an entry? Well, we very clearly have relative equal highs here. We have engineered liquidity. So what I told myself is if we come up in this next candle and we displace through this gap and obviously inverse it, and then show clear intent to want to go higher, and we get a really good close, I am definitely in longs. So what do? Our next candle, we come in, we inverse this gap, and we inverse this gap, right? So we look on the 2 minute, is there anything here? Nope. We look on the 3 minute, is there anything here? Nope. Is there anything on the 4 minute? Nope. Okay, so this 1 minute is the highest time frame gap in this leg that would be considered the manipulation, right? We have accumulation here, we have manipulation, and then what comes next? We look for distribution, obviously, right? So you can also compare this to like a fractal market maker buy model, right? We have the original consolidation, we have price making the sell side of the curve, which manipulates into a key level. And then usually we have the delivery of the market maker buy model, which usually happens in fast succession. So we had the 1 minute close really, really strongly. So I already knew we wanted to go for these highs. So I went in long for a 1-to-1. Again, guys, you definitely could have taken all of this. You could have taken all of this, but I always preach, I take the low-hanging fruit. I take the 1-to-1s every single time. Honestly, just because it's what I'm comfortable with. It's what I've backtested the most. And also, since this is an eval, again, I want to look for the most probable high scenario setup. A lot of people did take it all the way to CPI high, and I honestly think we would have made it to CPI high for sure. And I think that's the main reason we had this whole run up in the first place. But again, I like to take my 1-to-1s, and then obviously mechanically I like to go BE at the first internal high. Usually I wouldn't just make my BE mechanical, but because there's literally nothing else stopping price from going higher, literally the only thing I could think of to go BE here was this first internal high. We made a good distance from our entry as well. And then we got absolute perfect delivery, A+ scenario, A+ setup. I mean, everything about this setup was just screaming long. Everything about this setup was just, when I seen this candle open up going fast, I was like, please do not take these internal draws, because then that pretty much takes my BE out of the scenario. And honestly, I probably would have still taken it if we closed like up here, but I really don't like leaving really no low resistance right at our entry. But yeah, that's gonna be it. Hope you guys learned something. I did take this on an eval, as you can see. So I don't want to sit here and act like I took this on a live account. This was on an eval. You can see the proof over there, P&Lski. And yeah, that's it. I hope we get better trades like this in the future. I ended off the week $300 in profit, which means we are up 800 on the eval right now. And essentially, I'm just trying to take really high probability setups with high confluence, because I find that whenever I try to full port CPI, I just get wicked out. And it's never worked for me. So I've just been trying to take A+ setups over and over again. But yeah, that's going to be it. Hope you learned something. And remember to stay patient in the markets, because setups like this will present itself more often than you think if you just sit on your hands when you're not getting what you want.